Welcome back, and joining me for a closer look at what's played out on the market scene today is Cremen from Adviceworx. Thank you so much for your time, Caroline. Now we're getting closer to the Fed's next meeting, the September meeting, very big one, and every piece of data matters. From the jobs data that we saw last week, and particularly the non-farm payrolls for August, what story is this telling about the U.S. labor market?
So it's just showing that the labour market is weak, and one would lead into that thinking, well, then the economy is going to be weak. So I think this is the reason why people are probably a little bit concerned. From that labour data, there was an assumption that you're definitely going to get a 25 basis point rate cut. And I think the assumption's also slightly higher for a 50 basis point rate cut. I really doubt that is going to happen. But very important, later in the week, we're seeing inflation data. And inflation, we know, has been exceptionally sticky. The Fed is extremely concerned about it. They've said this before. If that inflation print is higher than expected, as it it might actually be, it raises kind of an ugly prospect of stagflation, where you've got low growth and high inflation. So I think the market's really going to be on tenterhooks on Thursday. I don't think it's going to stop the Fed from reducing interest rates by 25 basis points, but it might give the market pause for thought if it looks like we're going into that maybe you're raising the R word, the recession word, in some places again.
I know how that train works. Well, let's get into Chinese trade data for August that came out as well. Export and import growth, they're missing expectations. What can we deduce from those numbers?
Sure, why they missed expectations. We're in a bit of the middle of the trade war. One of your biggest trading partners is the US. I think that the exports to the US were down in excess of 30%. So what were people really expecting, me, considering all of that. So I think, as to be expected, I think, this unfortunate thing, the trade war, one would like to think that there's going to be some type of agreement between the US and China from, to kind of bring this to a close, at least create some certainty in the market. But it is clear that the US is using this as a political tool. So it's not likely to happen anytime soon. I think the market kind of shrugged it off, to be expected, but it's not going away either. So another thing just to add to global growth concerns, because China, even especially for a country like South Africa, we export, our commodities there, bit of a concern for us.
All right.
China.
Okay, no, I definitely hear you on that, Caroline. Let's get into the company news that came out on the JSE, starting off with Sun International, their half-year results. The first results actually under the new CEO, Ulrich Bengston. The company saying it continues to benefit from its diversified portfolio. What was interesting is that they were talking about the structural shifts in the gaming sector and how they're navigating that. They did describe their performance as solid. How would you characterize those numbers?
Yeah, I think it's solid, and as with all the results that came out, it's trading in difficult environment in South Africa. So anything that's positive is kind of good. Their continuing income up 6.7%. They increased their dividend, their cash flow, their free cash flow looks kind of strong, and where they've got this diversified portfolio, so not all of those parts of the portfolio kind of shoot light out at the same time. Think that, their results not so great. One would expect that, the South African consumer under pressure. But Sunbet up nearly 71%, and that's mainly from slots. So that's at least a very good thing. So I think, as well as can be expected in the current environment, and also it looks like that debt is under control. And if one remembers the history of Sun International, that's always very important to look at.
All right. Well, let's go into food production. AVI releasing the year-end results. Top line rising by a tepid 1%, but we did see bigger growth in headline earnings per share. We did see the share price climbing almost 3% as well. Just chew on that performance for us.
Yeah, so again, I think it's as good as can be expected in the current environment. I think, for them, their fashion segment, was a little bit weaker, but that is largely as a result of the closure of the Green Cross stores. Again, reflecting a pressure in the consumer, because these are kind of discretionary items. They're not foodstuffs like the rest of AVI. So, they seem to, this really does seem to be as a business where the management really has it under control. You can really see that from the margins. The margins are up. There's not much they can really do about the consumer environment, and the I&J. This is also affected by slowdown in China, because this is where they export a lot of the abalone to. So I think all in all, okay, and I think the dividend yield is 6+, which is good to see. So okay, under the circumstances. In fact, no, I'm going to take it back. Actually, quite good under the circumstances. There is a very difficult environment for these guys out there right now.
All right. Well, something else that's good to see from your eyes. Your stock pick for today, Caroline.
Okay, well, I'm going to pick Adobe. So this is something that probably, if you work on a computer, you deal with this company every day. And unlike other tech companies, this is down. I think it is down 40% over a one-year basis. And part of the reason for that is that people are looking at companies like this and saying, well, it's content creation. Artificial intelligence is really going to eat its lunch, and I would dispute that. I think that guys that are winners in this industry are going to remain winners.
Yeah.
They are developing their own AI infrastructure, and very important, they've got the customer already. And big customers, your corporates, your big content creators. I mean, not little guys like me, on my computer time, but the big guys.
Yeah.
They're not going to actually get rid of their contracts to go for the latest shiny thing, which doesn't have all the features, and more importantly, doesn't have the security features. So I think the results are coming out later in this week. I wouldn't expect great things from it, but I think it's nice to start to build a position into this, because I think they're going to be winners.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Caroline. Much appreciated. That was Caroline Cremen from Adviceworx.